hello and welcome. And we're here again in Holistic Investments. And I'm your host, Konstantin Kogun. And I'm delighted to have today David Kemmerer. Hi, David.
Hey, Konstantin. Thanks for having me.
Thank you for being here. So David, for someone who didn't know him, is the CEO and founder at CryptoTrader.tax. And this is, I would say, on popular demand, dozens of my friends, just literally call me and ask me, okay, so now Bitcoin is today is as of the day of this recording, 18,000. And I'm sure it might have a bigger all heights this year. And what's it going to be like? How do I cash out? How to make sure I am respecting the IRS guidelines. And so David is going to help us today with all this complicated tax guidelines. And before that, traditionally, again, we will go into disclaimer. So this content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. So again, we're off the hook. We can talk freely about taxes. And before that, really, briefly, David, how did you even start this company and what excites you about crypto?
Yeah, keeping it brief. In 2017, when things really started, the first bull run that brought mainstream people in, myself and my two partners were on the trading side. And so we were doing automated market making. And so we racked up a whole bunch of trades and quickly found out that all of that needs to be reported on our taxes. But because of the volume of trades that we were doing, we just really had no good way to report that. So we had the problem ourselves. Weren't very impressed with the solutions on the market in terms of automating tax reporting for crypto traders. And so we launched CryptoTrader.tax in 2017, to solve that problem.
Yeah. So let's then, I really appreciate your path, and I'm sure the content you're going to provide today is so important that it's going to speak for itself. Right. So let's dive in, I have so many questions, and start with a practical scenario. So this is one of the common things I get asked, and I will defer to you now. Right. So let's imagine scenario where a person bought a Bitcoin and acquired it on an official exchange like Coinbase, Binance, or Bittrex, or any other of top 10 exchanges, right? And now it was, imagine 2018, right? And now we're 2020, and obviously there's a good number of appreciation. We're not going to throw numbers exact one, but again, just the logic. So one scenario, which is a very simple one, by the way, it seems like, although it's not. How would I cash out? If I invested, let's take about 10 Bitcoins, right?
Mm-hmm. Yeah. It's actually pretty straightforward. So the IRS treats cryptocurrencies like property. Other forms of property your listeners are probably familiar with are like stocks, real estate. And so basically that just means that capital gains and losses rules apply to Bitcoin and other cryptocurrencies, just like they do with real estate or stocks. And so in your example, if I bought 10 Bitcoin, let's say I spent, just for math's sake, $100,000 to acquire that 10 Bitcoin on Coinbase. And 2 years later, let's say it's at 20,000. So now my investment has 2x. Let's say now it's worth $200,000. And let's say I cash out, like you said. So you realize a capital gain in that scenario of the difference between what you put in and what you cashed out. In this case, that difference would be 200 minus 100 gives you $100,000. And now you realize that as a capital gain, and that's a type of income that gets reported on your taxes, and you pay a percentage of tax on that $100,000.
Yeah. So this, what percentage? Let's talk about again, some of the scenarios. So of course it may vary according to your tax bracket, and we understand that, but maybe you can give, some of the examples that you have in your practice, something that you get the most of the times. Yeah,
you're exactly right. So it depends on two things. First, is it a short-term or a long-term capital gain? So in this case, if we bought it 2 years ago in 2018 and held it that whole time, that's going to fall into the long-term capital gains bucket, which you get a break on taxes for, right? The government wants to incentivize us to invest in assets for the long term, right? Hopefully their idea is that stimulates the economy. And so in this case, you fall into the long-term capital gains brackets, which depending on your personal income level, okay, so however much income I realize for the year, if maybe I'm a software engineer and I make $150,000, then I'm in a certain tax bracket, let's say, a middle one. And for the long-term capital gains rate, I'm likely going to be paying 20% on that $100,000 capital gain. So $20,000 to the IRS. And then let's say you only held it for a year, it was short term. Well, then that's just treated as regular income. So you don't get a tax break for holding it longer. It's just straight up taxed at your marginal income tax bracket. Again, let's say I'm, a software engineer doing okay for myself. Maybe that personal tax bracket is 32% right now. So it just depends on how much income Constantine or me do you make during the year. And that's what determines that percentage that you actually pay on your capital gains.
Okay, so I'm going to ask you again, later to do some mathematical equation, or again, hypothetical, whatever. Software engineer is great. Let's imagine a person makes 300, 400K a year. It's a happy person, they have good stable, income, and that's one scenario. And then the other scenario is a person, again, I would say digital nomad, and even may hold a US passport, but doesn't have a lot of official income at all, right? And the other scenario, which I get a lot, which is a little bit more complex, what happens in a case where my friend decided to pay me, again, and maybe even longer than that, 2016, just in Bitcoin, or just gave me as a birth gift, 1 Bitcoin straight to my ledger. Basically I have no records of buying a Bitcoin, right? This transaction, arrived to me from someone else, and imagine this person disappeared. So I don't even have an opportunity to ask him where he bought it. So how do I prove to IRS that I'm still law abiding citizen and I didn't get it from dark web?
Yeah, so a gift is not a taxable event. So as long as it's under the gift threshold. If your friend gave you a 1 Bitcoin gift, that's not going to be taxable for him or you. And you inherit his cost basis. So let's say he bought it for $10,000. You get the gift. That's not taxable today, but if you go and sell it when that Bitcoin has appreciated to $18,000, now you do realize an $8,000 capital gain.
But that's if I know, so we're going to talk about the mining aspect later, but that's if I know that he bought it for $10,000, right? Again, if it was longer than that, he might have just bought it for whatever, for $1,000 many years ago. So what happens next? And I don't assume that I don't even have access to this information. What's happening next?
Right. Well, then you have to go to your tax advisor and say, hey, how should we report this if we truly don't know what the likely best case scenario is? And again, none of this is tax advice, but you can likely go look at when that was actually transferred into your wallet. And, maybe you and your tax advisor decide, hey, we're going to take the cost basis at Bitcoin at this date, because that's the most reasonable thing to do. And, if it was way long ago, you're right. Maybe it was only $1,000. So your cost basis in that Bitcoin would then be $1,000. Again, now if you go sell it years later for 18 grand, well, now you're on the hook for a $17,000 capital gain.
Got it. So what would be the
challenge is the record keeping. People don't keep good records, right? That's the challenging part.
What would be, by the way, the benchmark? If you're saying, let's say, for the date of this transaction, so what do you use? You use, I don't know, Coinbase market price or coin market cap?
Mm-hmm. Yeah, the IRS has said in their FAQ that if you don't have immediate access to price data, you can use any of the leading, price aggregators. Coinbase would be a great one. CoinMarketCap would be reasonable to use. Any, mainstream product that's being used to gather price history would be acceptable.
So, and you will show in your platform how do we actually upload it, show and explain it in a minute. And the third scenario, again, just to briefly go over it, so it's when I have multi-currency portfolio, right? Which is, again, also might make it a little bit more complex. So it's a combination of like some tokens that I purchased on exchange, multiple, by the way, exchanges. If they're exotic, I might have bought it like in some exchanges that are like outside of US or DEXs, and then some of the offline transactions that I might get, again, as a gift from my friends, like for just because they like me or whatever. So how would you deal with that?
Yeah, so a multi-cryptocurrency portfolio you're talking about.
Yes.
So it's the same fundamentals, right? Is you have a cost basis in all of these assets, no matter how you acquired it, okay? So if you received it as a gift, your cost basis is you're inheriting your friend's cost basis, right? If you don't know exactly what his cost basis was, one, that's kind of a problem, and you should do your best to figure that out. And two, then you just have to make reasonable assumptions, right? And, explain to the IRS how you arrived at your reasonable assumptions. Then two, if you bought it from, some centralized exchange, well, that's not too difficult because they're going to likely have your transaction history. Or if you went through a DEX, again, trying to track it down if you haven't been keeping records can be difficult. But of course, there's block explorers, there's tools like ours who can pull that history for you. But anytime you buy or acquire or trade one for another, you are establishing a cost basis. And when you dispose of your crypto, whatever the difference of your cost basis is of course either going to be your capital gain or your capital loss for that transaction. And of course, it gets more complicated to keep track of all this stuff if you do have multiple assets to keep track of. And again, of course, that's why we built the software to just automatically do this for you.
Okay, so let's go directly into software, because again, like on a high level, I want to understand like how does CryptoTrader pull all my trades, and how do you provide a wallet address for CryptoTrader, like through a ledger or cold wallet, and do you even store my wallet address? Let's go with the basics.
Yeah, so basics, the most basic trader. And here we're in just the first step of CryptoTrader.tax, and you can simply add your platforms, exchanges, wallets, DeFi protocols that you've interacted with. So the most basic person, maybe they have a Coinbase account, and they can, import their historical data from Coinbase through a couple different options, right? Coinbase has a file of transaction history file that they give to all their users. You can simply drop that into CryptoTrader.tax. Or you can OAuth right into your Coinbase account, and then we will pull in automatically. It's making an API call over to Coinbase now, and it's going to sync my Coinbase account with CryptoTrader.tax and automatically pull in all those trades. So you just wait a little bit, and you'll see those trades get imported directly into CryptoTrader.tax from your Coinbase account. Now you'll see that we only are able to use read-only access. So that's the beautiful thing about OAuth. Is that we don't have the ability to move, withdraw, deposit anything with your account. So we can only read in your history, and you can see, bam, it pulled in all my Coinbase transaction history, and then I can go ahead and review everything that was pulled in from Coinbase right here.
Oh wow!
So there it is. We can dive into the details of each trade. Here I sold some Bitcoin for some USD. And so, that's how it works for each platform at a high level. If you don't want to API import, an account, you can just drop in again the transaction history file that a lot of these platforms, the vast majority, will give to their users at the end of the year, right? So here's for my Exodus transaction history. I'm just dropping in that file. No manual work's required, and I can just import it right into my account. And so then we can see, cool, I got that file in CryptoTrader.tax.
Nice.
For
DEXs. Let's talk about DEXs, because I see you have Uniswap there. So this is very interesting. I think that's a little bit more sophisticated and complex process.
It is, yeah. And so we're just really starting to roll out a lot of these features. So we recently, actually, it's not even live yet. I'm in our testing environment. Uniswap is going live this week. It's a big announcement for us. So you're seeing the behind the scenes. But it's pretty simple, right? You drop in your Ethereum address that you've been interacting with Uniswap on, and we'll go and parse in the Ethereum blockchain with the transactions that are associated with that Uniswap account. You can see I already did this before we started the video. And so I've made only one trade on Uniswap. but we can go see now that it was able to pull in that Uniswap transaction from my Ethereum wallet address. And so I traded ETH for Compound, the comp token, and now that will be obviously handled with my taxes. So we want to make it as easy as possible, right? And so behind the scenes, it's very complicated technical things going on, but when we present it to the user, we're trying to make it pretty easy.
Sure. No, and it's really, I don't think we need to go to a lot of technical things inside today, but I think, yeah, if you're going to implement it with all the DEXs, it's going to be a huge benefit for the people who really want to, again, provide their tax reports and make sure that, you know, it's all in one place. Because according to what I see, you can consolidate all the trades from all exchanges and all the, like, you know, DEXs that you have in one place, right?
Mm-hmm. Exactly.
And then you pass it to basically to your accountants, who will probably not love you for this, but, you know, they will have to.
No, they will love you because it'll be exactly what they're used to seeing. So typically, and see, now I'm actually running my tax report. Hang on. There we go. Mm-hmm. So no, they'll love you because an accountant is simply used to receiving what's known as a 1099-B from a broker, right? From, let's say you're using Robinhood or E-Trade. And so the accountant is used to just getting a simple tax report that looks something like this, if you can still see my screen, that reports just the US dollar value, capital gains, capital losses, and income that their client has earned. Problem with cryptocurrency is it's transferable. So Coinbase does not have the ability to give you, Constantine, a capital gains and losses report in US dollars, because Coinbase isn't able to track your cost basis across your Uniswap history or your ledger, right? Because you're sending it all over the place. That doesn't happen in Robinhood. Everything happens in one account. So Robinhood, of course, can give you tax forms. But your accountant will love us because you can simply download your IRS form 8949 based on all of the data that you imported into CryptoTrader.tax and just send that right over to your accountant. This tax form is exactly the same form they're used to receiving for their for stock trading. And so they'll see it, they'll be, this is perfect. And so that's obviously the value that we provide. No,
that's definitely tremendous. Again, I'm going to ask you a tricky question because, you know, I want to add some spice to our conversation because, I mean, since CryptoTrader, like, it consolidates all the, like, all your activity, like, on all the exchanges, it has a comprehensive picture and it's great, like, because you can see all your holdings in one place. Your accountant, like, finally loves you. The big draw of DeFi, as we know it, like, you know, the fact that, like, you're giving investors to an option to bank permissionlessly. Like, so basically you don't, I mean, a lot of folks probably might consider not showing everything that, you know, they do. Like, you know, let's put it this way, because again, it's a very, very thin line we're talking about. So yet abiding regulation is important. So how do you even balance, you know, like, you know, those two factors when communicating with the, you know, the industry players, and what steps do you take to ensure that, you know, privacy of those financial records are, like, in place?
Yeah, that's a great question. So first of all, we're not in the business of trying to convince people that they have to be reporting their taxes. That's the IRS's job. We're simply a tool that you can use if you want to report your stuff. So that's, like, first and foremost. And second, the really big thing, and that's very important to understand about services like ours and CryptoTrader.tax in general, is we collect very intentionally zero personally identifying information. So we're not like TurboTax, who's actually filing your tax report for you. And of course, then needs to know your social security, where you live, if you got married last year, right? We don't know your name. We don't need to know anything. The only thing it takes to sign up for a CryptoTrader.tax account is an email address. And you can use whatever email address you want. Any information we pull is, of course, then not able to be tied to a personal identifier. Even for, like, DEXs you talk about, that's all public information. It's all on the Ethereum blockchain. Anyone could go through and see what a certain Ethereum wallet address cashed out to. And so the beauty of our business is we don't want any personal information. We want our users to understand that we're just a tool that they can use if they want to be reporting their taxes. We don't report anything to the IRS. Even if the IRS came knocking on our door, we would have nothing for them. We would just have a bunch of tax reports and who knows who they belong to, right? So that's kind of the logic behind
privacy, security. Now, of course, everything is end-to-end encrypted. The security of the platform is modern standards. I'm not the one to talk about that. I'm not the developers behind the whole thing. But everything is modern security, is best practices. But the great thing is we collect no PII.
Got it. So before we finished, just the demo, of the platform, and just quickly, last question, maybe on this side, maybe you can show, how would you upload, information from, let's say, your Trezor or Ledger, and again, this might be a tricky, not that convenient thing because, some of them have user-friendly opportunity to do that. Some of them that might take a little bit of more manual work to do.
Right. So right now it would be manual on that end. And the reason being is that traditionally people use ledgers, Trezors, just to hold cryptocurrencies. Mm-hmm. Now, of course, that's changing as DEXs become more popularized and you can interact, straight from wallet addresses. But, in the past, people had to put their crypto on exchanges if they were going to do any trading activity. So of course, as we're building the business, we launch integrations in terms of what needs to happen. And so in the past, and again, I stress in the past, the taxable events, trading, selling, buying crypto happened on exchanges, which is why we integrate mostly with exchanges, right? And so if you want to import your ledger transaction history, first I would ask you, do you have any taxable events on your ledger? Because if you don't need to import it, right? Transferring crypto from one place to another is not a taxable event. And the system will automatically balance that out. You don't need to upload it. Now,
so can you pause for a second? So you're saying, that was my other quick, synopsis. So if I have crypto assets on my ledger and I didn't sell it, or I'm not even planning to do it, I don't have to report it, right?
As long as you didn't incur a taxable event. So if you bought that crypto on Coinbase and sent it over to your ledger just to hold, yes, you have nothing to report. You have not disposed of any crypto, meaning you haven't incurred a capital gain or a capital loss. You're just holding.
Yeah, I just wanted to make sure it's very clear because this is another popular.
It is the point of confusion. People think, maybe if you transfer something to another wallet address you own, but still in your possession, you never disposed of it. You don't need to report that. It's only when you incur a taxable event, which typically is when you dispose of your crypto in one way or another.
And same goes for the I see this type of airdrop and or any type of coins that somehow you probably get as a bonus for transactions, or maybe there was a halving event and there was a fork, and it doesn't matter if you don't sell it and it's in your ledger, it's not a taxable event.
So this is where it gets a little bit tricky because you can incur a reporting requirement for this, okay? So there's a distinction that needs to be made between capital gains, capital losses, which is investing activity, okay? And ordinary income activity. Other forms of ordinary income would be literally income you receive from a job or interest income, okay? Airdrops, they do fall under ordinary income. So again, you see this entry of my uni airdrop that I've added into the incoming transaction section. This is a form of income that I do have to report on my taxes. So if you received an airdrop and you took custody of it, you recognize income by the quote unquote of the law, income at the fair market value at the time you received that airdrop. The same is true for staking rewards or mining income or.
But here's how it goes tricky. We're going to go to mining. That's another challenging place. But okay, so I received in your case 400 uni tokens, and amazing, but I didn't sell them. So if the logic of here, this is what I wanted to clarify. I didn't sell them, but I have to already pay taxes on them. Doesn't it make it a little bit silly?
Yes, it's very difficult, and that's one of the most dangerous, troublesome tax scenarios that people get themselves into is if you earned a big airdrop, you do owe income taxes on the US dollar value amount at the time you received it. Now that stinks, and I completely agree with you because you haven't actually realized any US dollar value yet because you haven't cashed it out. but just by the letter of the law, you are on the hook for income taxes for that amount.
So, and again, I want to know, like, you know, if you can provide an example, how would I pay for this 400 tokens? And another thing, like, just to take into account is, I mean, I can literally lose money. Like, you know, like if, like, let's say 1 year, like, you know, unit token goes, like, you know, takes a hit of 50%, like, you know, and I pay the taxes for the amount that I've actually haven't cashed out. This is a bit ridiculous, you know, but
Yes.
This is how it is, right?
Exactly. And this is what I was referring to as it's the toughest situation that sometimes crypto investors find themselves in. It happened in 2017 a lot. So people realized all these paper profits where they weren't cashing out in late 2017 when Bitcoin went on the huge run, and then it lost and just, you know, the bottom fell out of the market in late 2018. But people had been incurring taxable events when they're trading one crypto for another. And so on paper, they've made all this money, but the reality is the value of their portfolio is 1/10 of what it was worth, but they still owe taxes at what it was when they were incurring the taxable events. Mm-hmm. So it does pay to be aware of the high level tax implications of cryptocurrencies, because you don't want to find yourself at the end of the year having a tax bill that your portfolio can't even afford anymore. It's also smart for income tax cases like the Uniswap airdrop is to cash out some of that so that you know you can afford your tax bill. Even if the value of Uni drops, you cashed out some at the time, let's say 25%, so you can pay the income taxes on it. And for the Uni airdrop, we can go back into what year did I do that?
I guess 2020, like
yes.
the only year you can do it.
Exactly. Oh, I'm going to be blocked because I'm in a beta testing environment. I'm going to have to unlock that, but I can talk through it. Essentially, right? You'll see on your income report in CryptoTrader.tax. Let's say Uni was $3 per Uni token, so $1,200 of income. So you'd recognize $1,200 of income that gets reported on your tax return. And depending, again, on my personal tax bracket, let's say I make $80,000 this year, maybe I'm going to owe 25% taxes or 22% taxes on $1,200.
Mm-hmm. Got it.
But you're right. It's the income side of things, and this is the same with mining. And I saw your question that you had before this.
Yeah,
it all works. It works the same. So
it's the same. So just to like voice it out, like, you know, so, you know, in your website, it says like when you earn cryptocurrency through any means, whether that is mining, staking, or forms of interest, like you recognize income at the fair market value of the cryptocurrency at the time it is received. Mm-hmm. So this income needs to be reported on your taxes. So, I mean, again, like if I mined, again, Bitcoin or any other crypto and it lost value. So just to make it clear, I still owe taxes on the dollar value of the income at the moment it was mined.
Correct.
Which sucks, but okay, that's good.
But then you said it lost value, and let's say you dispose of it now. Well, now you incur a capital loss, and that will actually deduct against your ordinary income up to a certain threshold. And so you will receive some of that back. Let's say I mined one Bitcoin when it was worth 10,000 and I realized $10,000 of income. Then let's say I sell it a month later for 8,000. I have $10,000 of income and a $2,000 capital loss. Individuals can deduct up to $3,000 of capital losses against ordinary income. So that actually does even out to an $8,000 tax implication.
Got it. Well, yeah, that's a smart strategy if you're actually understanding by like closer to the end of the year that, you know, it's easier for you to sell this crypto asset, like, you know, not to have the capital gains for this, right? And but it sucks for the people who are like long-term, I would say, believers or hodlers, so to speak, right? So for them, it becomes very tricky, like, you know, so yeah.
For miners especially who are mining to hold, this is and this is literally why companies like BlockFi and the loan companies have popped up so frequently, because people need to take US dollar collateral off their Bitcoin so that they can pay their taxes, right? But they don't want to sell their Bitcoin. So they collateralize their Bitcoin. they take X amount of cash, they pay their tax bill, and then, they still retain their Bitcoin.
Yeah. So same, I guess, with staking, same concept, right? So it just on the
Exactly.
moment, so, okay. So I doubt that this ever appeared in your practice, but I will still ask this quick question. So in terms of if an individual might have, let's say, a mining facility or a friend who's helping him to mine and they co-invested back in the days, and it's even out of US. And imagine a crazy scenario when a person decides to pay taxes somewhere in Iceland or Mexico or in any other country of the world. So they already paid taxes over there. How do I even prove that I've already paid taxes in another country for my crypto?
Well, I mean, it depends where you're a citizen of, right? Because that's where you're paying taxes. This one is weird, and I would have to bring in my CPA to talk through this one. And anyone that gets uber complicated, I would always recommend people go talk to someone who specializes in all of this, not just crypto taxes, but all types of taxes.
Yeah.
Because that obviously, like you said, gets into however the tax implications work for multi-domestic tax paying.
No, exactly. And so I was just curious, if you ever, I really doubt that.
I haven't seen it. I mean, no one's come to me asking for that, but I'm sure it happens.
I'm sure that most likely people will not even try to do that, because it's a lot of taxes are just lower, in most of the countries, unlike you're talking some more of countries like Denmark or others, in Europe, where they have pretty high tax bracket as well. But no, but it's just it was just interesting. How do you even consolidate? If you paid somewhere taxes already and you want to just make sure that, you're not getting double taxation issue. It's fine. We'll leave it outside. It's not a big use case scenario. The other thing, which is, let's come back to the United States and our IRS. So, I mean, what is your take on IRS offering a bounty of $625,000 for anyone able to break Monero and trace transactions? Is it effective, or do you consider it's counterproductive?
Yeah, I think this just gets into both people who really are trying to avoid large tax bills, as well as money laundering, both from FinCEN's side and the IRS. But I mean, it doesn't surprise me that the government is going to try to track down people who they believe are breaking the law, in terms of whether they're not paying their taxes and committing tax fraud, or they're laundering money. So I guess my take on it is I'm not surprised, and we'll see if the market can come up with a solution for them. I'm not well versed on this breaking in Monero's encryption.
Yeah. Okay. So another question again, do you think it is appropriate to call Ethereum and Bitcoin more of crypto assets instead of cryptocurrencies, when, you already mentioned that IRS consider them a property? So in your opinion, does that reduce any potential friction of the US government so that they don't see Bitcoin, Ethereum as competitors to the dollar? And one other angle, I just want to throw it out there, so do you foresee that in a crazy scenario that US government even attempt to take property from about 40 million people? I guess that's how many people already bought crypto. Is that even possible?
So for the first question, I think, I think the name is a bit of a misnomer for most cryptocurrencies, in the sense that they're not, and they're never going to act as currency, right? Peer-to-peer value transfer. It's much more, it has evolved into this store of value narrative, and this asset, right? It's an investment. So yeah, I agree with you. Crypto assets is probably a better name. Would that help US regulators be more nice to it? I don't know. Probably not. I think they're just always going to look at it pretty hard. But I think it's going to continue making strides in regulatory environments, and just with governments in general, and with institutional investors. The second question was, what was it? I can't remember.
Yeah. So right now that some of the wealth managers that I know personally, they mentioned right now, there's a myth that, oh my God, what's going to happen if all of a sudden, US government will ban Bitcoin or a crypto per se. Which the answer was, it's always in CNBC publicly, so that the answer was that, well, think about of US government taking property from 40 million people. Is it even possible? Do you understand the consequences of this? So
Right.
I was just interested, what do you foresee? How's it?
Yeah, I think anyone who is worried about if the government bans cryptocurrency, that somehow they'll take your property is just not very educated on how that would look. It's the exact same take. When would it ever be okay for the government to come and take your house, 40 million people's house? There would be civil war if that happened, and we'd have a much larger problem than cryptocurrency. So yes, I think of course the government could ban crypto and be like, hey, no business is allowed to take this, or people aren't allowed to use it. But people could still hold it, and the government wouldn't be able to go and just take your private keys somehow.
Yeah, I would agree with that 100%. So another question, I'm just curious, which is more, I would say your professional side of things. How do you even source proper accounting rules for crypto when, in many cases, a lot of law firms I know and even regulators are trying to keep up with taxation rules, and sometimes they have their own view. How would that work? So do you have somewhere the source where you get all the information?
Yeah, it's a great question because this affects us greatly. The rules are not 100% clear cut on how certain aspects of crypto needs to be treated. So what we've done is we've built a team of some of the best tax professionals in the space who live and breathe crypto. That's all they do is crypto tax returns and interpreting tax laws for crypto investors. And so we have an advisory board of those people. But then, of course, if it's a gray area, we have to let our users decide how they want something treated. And so again, we don't, with CryptoTrader.tax software, you can classify staking rewards however you want, and we'll just spit back what they were worth, the US dollar value, and you can still classify those as different types of income. Because again, that's one example where the IRS hasn't explicitly said staking rewards are ordinary income at the time, yada, yada. But what our advisors and what we can do is infer, because they've said that about mining and airdrops, it's very likely that if they would say something, it would be ordinary income, fair market value at the time you received the reward. And so that's kind of our approach is we take reasonable positions. And if it's a gray area, we always have to let the user decide how they want to handle it, whether they want to take a very aggressive stance with filing the income or maybe something more conservative.
Yeah, but I just want to clarify more about the staking component, because if I would somehow agree, even it doesn't make sense to me, but I somehow would agree that in mining case, like in airdrop case, well, okay, we just have to abide with those rules and it's fine. But when you're saying that staking it falls into the same basically rule and the same system, I am not sure I understand it, because again, if I stake my token, so I bought it in the same day, and imagine I went and I staked it, whatever that might be, Syntaxis, Aave, or any other staking protocol, and then I'm waiting. I'm actually looking for 1 year to receive, similar to lending, to receive my gains. And I don't really understand, how can you justify paying those gains immediately when you're even starting to stake? Because again, it might go different direction.
Well, when did you take possession of the reward for staking? That's what I would ask.
That's the point. Normally it happens the shortest, I would say it's quarterly, right? So if that happened, yes, I agree there is a taxable event. But if it didn't happen, right? If it happens, imagine I do it now in November, right? And I'm looking to receive my rewards in next November because I'm staking it for 1 year. Mm-hmm. So then if I understand you correctly, then it will fall into 2021 tax report.
Well, again, the question is, when can you constantly literally take ownership of your rewards and go spend it? Like, when is it truly yours? I don't personally stake, so I'm not as well versed in the actual use case, but that would be my question to you. It's like, when can you take that reward into your wallet and go spend it somewhere?
Well, that's the point. If you block it, you basically it's almost like lending. If you give your money, doesn't matter if US dollars, Bitcoin, or any.
Well, I'm not saying your money, because I understand that you can't touch that. I'm talking about the reward. So let's say I stake 1 Ethereum and slowly I get rewards as we validate blocks, right?
Exactly.
When do I have access to those rewards? Is it not till the whole contract is over?
That's the point. It varies. Sometimes, some rewards can be provided to you on a monthly basis, and sometimes you will get a reward only in the end. And that's the point. So what you're saying, again, I just want to confirm. So whenever I get the reward, I pay taxes, per this particular moment of time, right? If I get 4% and in this quarter, and then I'm gonna get the rest of my, let's say 4%, in the next quarter, let's say 12%, and let's imagine on Tether, which is a very popular staking tool right now as well. So whatever you use, your BlockFi, Nexo, Celsius account. So then I receive only 4% this quarter, right? By the end of 2020. So then I will pay essentially only 4%, and then the rest it falls into 2021, right?
Right.
Okay. So just want to make sure it's clear, because again, a lot of my friends are doing right now this, and it's not crystal clear, because
Yeah, it's when actually you get bled and the reward comes to you, right? If it was 4%, that's still X amount of Tether, right? You'll get maybe 12 Tether. And when you take possession of that and you are actually distributed that, then what's it worth on that date that you can spend it or whatnot?
Got it. Okay, so that's more of a similar to what I would pay for lending, as capital gains, right? So that's a bit easier. So it's not the same as mining, which makes me happy, or not the same as airdrop, so that at least makes sense. So whenever you get returns, then you pay taxes on top of it. Okay, I'm glad we clarified this. At least one good thing. So. In terms of the other question, coming back to the regulatory environment and the landscape, so what does the regulatory landscape look like in the next 12 months, in your opinion? What should crypto investors prepare for? Is there any things that you see in advance?
Mm-hmm. Yeah, so I'm very close to the IRS and what they're working on. And the next big thing that's going to come out is much more 1099 and just information reporting requirements. And so already Coinbase, Kraken, Uphold, Gemini, they do this voluntarily, where if you have a certain threshold of activity, they send a 1099 to you and to the IRS reporting, David had $40,000 of crypto volume. Now, they do this incorrectly, and we don't have enough time to dive into how they do this. But the IRS is going to mandate that cryptocurrency exchanges do a lot more of this information reporting. And of course, the goal is to increase tax compliance, right? Because if they get a 1099 about Constantine's Coinbase activity and they don't see any crypto income filed from Constantine, boom, that triggers a red flag, and they're going to send you a letter saying, hey, why did you not report your crypto income? We see that you should have.
Mm-hmm. Yeah.
That's a big one that I'm looking out for. I know it's coming. On top of, that's going to be the next thing that comes from the IRS. We've seen over the past 12 months, they've released a lot more guidance. They've sent out more warning and action letters to people that they suspect are, not reporting. But yeah, the past 2 years have been only increased enforcement from the IRS's perspective. And it makes sense. They think they're owed money, and they think there's a tax gap between their amount they're owed and the amount they're getting paid.
So what happens, another question which I get a lot, some of my friends, again, they just literally use small increments of Bitcoin to pay for outsourcing, like designers, developers, or any other like practical services, which is also a fair way to work with, like especially in some countries like where PayPal might be blocked or any other popular services. So you bought it on Coinbase, whatever, like the increment of, let's say, $200, right? You send it directly to the person who provided you also a fair market value service. Do you even have to report this?
Yeah, I mean, you're still disposing of it. So if it happened on the same day, you're not going to have much of a gain or loss. But technically, by the code of the law, you'd still report, maybe it moved $1 between when you bought it and when you sent it as payment. And so, maybe you bought it for 200, and when you sent it, it was worth $205. Technically, you're reporting a $5 capital gain from that, right? Because you disposed of that amount of Bitcoin when it was worth 205, but you acquired it for 200. So that's how it would work. Of course, a lot of people aren't going to do this, but that's technically how.
Yeah, that's ideal case scenario how you should do it, right? That's
exactly. I'm not going to tell you how to do it, but that's quote unquote the textbook way that it would actually work from a tax reporting perspective.
Got it. So it's valuable to even understand it, because I know people do it all the time. And again, if they want to be 100% abiding law citizens, right? So they should know it. And I'm happy that you're providing this knowledge. The other tricky question, which I'm going to ask you, it's how do you deal with mixers and that trying to obfuscate the system, and generally their goal, like a very transparent goal. It's a tricky question, but their goal is to hide from any transactions, right? And for someone who are not familiar with mixers, you can send your crypto, and it's it may be 6 times go into certain faucets, and then you basically you may lost the trace of where it's going and how it's going, right? And there was some crazy stories recently with people are trying to use them quite often, and they got caught. So just full disclosure for someone who's listening right now, it's not a bulletproof solution, and you have to be very careful and even thinking about this. But again, so this is not an advice to use a mixer, just to make it clear. But
for the mixer.
No, God forbid. But they exist, right? So I want to understand your stance on them, and how do you even deal with potentially, trying to, understand, if somebody, in biblical way comes to you and say, listen, I want to repent. I want to still file a tax report. I use a mixer one time in my life, and I still want to do it, but there's no way to even identify where it went. So I cannot even show the address where it went. So what are you doing in this case?
How are they using it? Are they using it to buy goods or services? Are they just cashing out for USD? What's the end goal? Because actually what happens in the middle doesn't matter that much for tax reporting. It matters how you bought it or acquired it, and then what you used it for. So that's my question.
I would say, I'm not an expert in this topic, but I would say a lot of people just do it for the transaction. That's what I would believe in.
Yeah, they're going to pay someone.
Yeah, I think, or transfer, I don't know, pay, maybe just transfer, for whatever the reasons they want, some crypto assets, and they just probably do it, I don't know, maybe use case scenario because they might have problems with transferring the same day bank, let's say on weekend. That happens, and people just need to urgently send money to Venezuela for someone's funeral. Again, God forbid, but that's the craziest example I might think of right now, right? And they just send it, they don't want to be really careful not to show the end beneficiary, and they might use it. Again, there might be completely different scenarios. I don't want to even think about that, right? So, but yeah, so I'm just curious, how do you have you ever dealt with mixers, and what do you think how would that even work from tax perspective?
No, we don't deal with it because the people who are using mixers are not the ones who are reporting their crypto taxes. Right, that's just the truth. I've never even seen someone come through and be like, hey, how do I handle my mixer? Because like that's the antithesis of why they're being used. So I don't have a great answer. But like if you wanted to repent, like you said, and come clean and report, you don't need to report all the different transactions and how you hit it. You just need to report the income that you earned wherever you earned it, right? Maybe it was when you first received it, and you received $1 million from someone for, maybe just black market activity, but that's still income, right? And you would just report, hey, I made $1 million of Bitcoin income. And that's pretty easy to.
Yeah. Do you have to explain what exactly did you sell? Right. What type of ammo or no? But I'm on being on a serious note, like, so you do have to explain to IRS, how do you even receive this million potentially if you forget about it, like you have amnesia, and then you wake up and you understand that you have 1 million worth of crypto on your ledger and you want to report it. So you do have to explain like who paid it to you and why, for what services, right?
No, you would just have to literally report $1 million of income on your tax return. Now, if you got audited and they were like, hey, how did you make this $1 million? Then you'd have to explain to them, well, I sold a Chinese cyber cat, for $1 million, whatever it might be. But no, you don't even have to say who paid you. You just have to report the income, right? The United States has a self-reporting tax system. I report my own taxes. I don't tell them how I made my money unless they come asking, right?
Yeah, so that's important. I just wanted to clarify, specifically throwing those. Right. Again, there's a lot of misconceptions here.
There is. And it does get complicated in these use cases, of course, it does.
Yeah, I'm sure. So one of the last questions, I want to ask you, so how do you differentiate from competitors, right? And how are you staying competitive and all those? I'm sure you're benefiting a lot from the bull market and people are buying more crypto. I'm sure they're willing to cash out some of it, so yeah, let's be objective again, as a journalistic
as objective as I can be, running my own company. We're the best out there.
Of course.
There's of course, whenever there's money making opportunity and there's an extent of that when people need help reporting their taxes, there's going to be a competitive market. That's good. It helps consumers. We all compete against each other. So when we think about competitive and where we position ourselves in the market, the big things for us is, one, we have to create the easiest to use software, right? When people come to us, they should not have to watch this video before to become a tax expert, or even they shouldn't have to learn about this, right? We should make it easy enough so that they don't even have to think. So that's how we differentiate, just ease of use. Then two, a big way we differentiate is how we go to market, how we get to market. So distribution, right? Can we get in front of people first, right? And so that comes down to our distribution channels, whether it's SEO, search engine marketing, whether we're going Facebook ads, we want to get in front of someone first. We want to be the ones to help educate them and walk them through the process should they want to report their taxes. But at the end of the day, all of our competitors, us included, are trying to do the same thing. We're trying to build software tools just to make this easier for people who want to report their crypto taxes. I don't know if that's a good answer, but that's how I think about it.
No, it's a fair answer. So one last thing, I forgot to ask you about the STO aspect of it. So there are right now, security token offerings, and they have their own exchanges, and some of them are INX. Full disclosure, and again, we. In my firm, we have, asset-backed token as well, so you can also facilitate in reporting, capital gains on those assets as well, right?
Right, exactly. So that's the one nice thing about the IRS blanket lease calls everything property, right? And not commodities and not, which have slightly different tax treatments. Just right now, it's blanket. Everything that's crypto, even if it's a security token, is property. So SEC rules don't impact personal tax reporting. They impact if you're going to go try to raise money and call it a security and whether the SEC determines that a security. But for the investor who's investing in the vehicle, it's still capital gains or capital losses income. So we don't have to deal with that as much. That's much more on businesses who are financing through these tools or who are asset managers, right? You have to be reporting things differently. But for your average just crypto user, the fact that it may or may not be a security token actually isn't quite relevant because it's still just capital gains and capital losses income.
So just to make it clear, I was referring to the case when you buy it on a public exchange, and you're not like becoming a limited partner in a fund, so in this case, you're completely right. And I think that's just important to know that there are also unfortunately, also logically, it doesn't make total sense to me. I would differentiate them, but again, it's easier for you, and I'm hoping that it's easier for our viewers to at least have this basic understanding of different crypto assets. So yeah, I mean, look, I think we've exhausted some hardcore questions. So I'm asking you just a quick question about life. Very simple. My from my background, a very literally simple question. What's the meaning of life to you?
Meaning of life. Very simple question.
Yeah.
The meaning of, all right. I think it's to pursue challenges and just pursue growth. Is become a better person every single day and not seek comfort, but seek challenging things, because that's how you have fulfillment. So, it's been hard to build this company, but I feel fulfilled because we have tens of thousands of people all over the world who use our software. That's a great feeling. So the meaning of life. Seek challenges, become fulfilled. There you go.
Beautiful. And I'm happy that I didn't notify you that I'm going to ask you this question, because it's coming from your heart.
Yes. This is off the cuff.
Yeah. So yeah, and maybe I asked this a lot of people, some of the book that inspired you in your life and helped you to become this better version of yourself. You may name one or two at your preference.
Sure. There's a lot. I do enjoy reading. I love reading autobiographies of people who I find interesting, because I find them very inspirational. So probably my favorite is Shoe Dog, which is a pretty popular book with the Nike founder, Phil Knight. Peter Thiel's 0 to 1 is a book that I loved. In terms of more operational, executional strategies, Traction is by Gabriel Weinberg, is a great book just on marketing fundamentals. So those are a few that I really like. I could keep going. I've got a lot.
No, it's fine. I think let's keep it on 3, so, and maybe you can name people who actually not necessarily in crypto industry, but people who impacted your life. It can be your parents, or any philosopher, any economist that helped you to also make this internal breakthrough.
Mm-hmm. Yeah. I like a lot of the personal bloggers. So Mark Manson, Ryan Holiday, James Clear. I've read a lot of their stuff. So I think those folks would be at the top of my list.
Yeah, they are amazing, and I also listen from time to time to them. Yeah, it's fun. I'm running in the morning, every Monday, Wednesday, and Friday, and I just for 1 hour, 5.5 miles, and I put on my headphones, and listen for 1 hour to sometimes Anthony Pompliano, sometimes for Lex Friedman, sometimes I listen to Ryan Holiday. Every time it feels like I'm with them. It's such a connected world right now we're living in.
Yeah.
And I think it's a blessing that on the one hand, it's crazy. You see, I'm doing it. I have problems with light. So I'm have a weird picture all the entire interview. So I apologize for that for my viewers. So again, I'm sorry. The podcast folks will not see it. So only the YouTubers that will enjoy more your picture, which is great. So, but yeah, I'm grateful to you for your experience, for what you're doing to the industry. I think being I would say compliant with the regulators is very important, and I think it's underestimated. If we want to grow to $10 trillion industry, which is, I think, it's going to this trajectory, like, we have to make sure it's also like growing in the right way, right? And don't have those folks who are trying to be purely anarchists and who are trying to be smart and like, saying, oh, we're gonna like obfuscate, or we're gonna like, bypass all the government. So that doesn't help us anymore. And I'm really, I mean, they exist and it's fine. We have to respect their existence, but at the same time, if we're going to grow as an industry, I truly believe that folks like you are actually like helping to make sure that we're getting there, like we're respecting all the rules. So I thank you for that.
Yeah, no, thank you. I echo what you said.
Yeah. Any closing words? Any wishes to the community, like to the people who are going to start using your platform after this video for the first time, for example?
Yeah, just reach out to us. We're very responsive. We're easy to get a hold of. If you have any questions, myself or someone on my team, is always more than happy to help clarify things. Yeah, so just reach out. We're more than happy to help.
Yeah, and you guys are in Austin, so like right now it's becoming also the hive for the bloggers. I mean, Joe Rogan and other folks are moving there.
Yeah,
so
they're all moving to my city.
So I envy you in a way, and it's we didn't have time to talk about how Texas is also pretty attractive from a tax perspective, but I leave it to people to ask their CPA about that, like, and there's a huge wave, what I would say, like, from California, New York, where I am, like, people move into Texas. So yeah, it's not a solicitation of move to Texas, but I would say it's something to just learn about and understand why is it happening, and then I really think that you should talk to David for all tax related questions in your crypto.
Awesome. Well, thank you for having me on, Constantine.
Thank you, David.